All right. Good morning, everybody. Good morning, everybody, and happy Tuesday. Today's June 18th, 2024, and the top story this morning is retail sales in the United States came in lower than expected. Let's get right into the numbers. The numbers, retail sales up 2.3% year over year. That is below the 2.8% expected. That's the year over year number, and also down from 2.7% last month. And I would also add that last month's number was revised lower. It was initially reported as up 3%, and that was revised down to up 2.7. So we got disappointing numbers for May, and we got a revised to the downside for April. Less retail spending. There's only one possible conclusion you can draw from this, and that is, once again, people are spending less money because the increase in inflation, the increase in the cost of living is forcing consumers to tighten their belts. And that is front and center today in the retail sales report. Also, the month-over-month numbers, we got similar results. We had plus 0.1% growth in retail sales for the month of May. Again, guys, this is below the rate of inflation. These are not inflation-adjusted numbers, so we're seeing declines in real sales here. That 0.1% growth month over month, that's actually an increase from the initially reported flat 0.0% number back in April, but that was revised down also to negative 0.2%. So we swung back to positive for May, but it was still a miss. The market was expecting a bigger positive at 0.2. We got 0.1. And also the April, what was initially reported as flat, that was revised lower to a decline. So both the year over year and the month over month numbers, guys, we are seeing slower retail sales. This is definitely going to hit GDP. It's not a direct input, the retail sales numbers, into the GDP now estimates, but I would expect this is further indication of a slowdown in consumption, and consumption is about 70% of US GDP. So more indication that the economy is starting to turn. Now, this happens just as we're getting this note from Goldman Sachs this morning. They're saying that the US labor market stands at an inflection point. And they're making some subtle references to JOLTS and the non-farm payrolls numbers here. They're saying any further decline in job openings is going to affect job gains. They're basically saying the labor market is wobbly here. It's very weak. This is right after Jerome Powell made that, in my opinion, rather stunning admission at the FOMC that the jobs numbers were overstated, or he said there is an argument that the jobs numbers may be overstated. Yeah, maybe overstated when we're seeing 400,000 jobs lost in the household survey, and yet the establishment survey still continues to show almost 300,000 jobs gained. Yeah, maybe those might be overstated, just maybe a little bit, Jerome. So Goldman is out saying, don't worry, the U.S. labor market, it stands at an inflection point. They're sticking by their prediction for 2 rate cuts. MacroEdge came out with some data out of California from their Office of Legislative Analytics, or the Legislative Analyst Office over in California. They're saying that the jobs numbers were overstated. Hey, that's the same thing the Federal Reserve just said. But how much? They actually revised them down quite substantially. Now, this is only one state's worth of data, but they're saying we had initially reported 120,000 jobs gained in the fourth quarter of last year in California. Whoops, we may have overstated that a little bit, and they swung to a 30,000 jobs lost for the fourth quarter. So they overstated by 150,000 jobs. That is one state. Now, it's a big state. California is about 1/8 of the population, but there's another data point that says, hey, we're overstating the strength of the labor market. We're doing it substantially here. Goldman Sachs is saying it. The Fed is saying it. Everybody can see it. Anybody who bothers to open up these jobs reports can see it. And yet the politicians keep making their stupid speeches about their economic plans and all the jobs added, even though anybody living on the ground knows that's obviously not what's going on here. Also going on this morning, we've got Apple Pay. Apple Pay Later is gone. Apple is ditching the product. That was their buy now, pay later service that they were previously offering. And Apple has announced that they are throwing that one out. They're going to be partnering with a firm instead. So you can still buy now, pay later using Apple Pay instead of Apple's in-house buy now, pay later. It's going to be third-party fintech. And gee, you think maybe that has something to do with Apple didn't like that nobody pays them back I'm just throwing it out there. Maybe Apple got a little taste of what it's like to be a bank today, making consumer loans to people with an average credit score below 660. And they said, you know what? I think we're going to partner with a firm, and we'll let a firm handle the whole getting paid back thing. And a firm doesn't really care because they just package that debt into securities and sell it into the debt market, into people's pensions. And I'm sure that's all just going to end so well for everybody involved. Apple not making any statements to that effect, just saying, hey, we're getting rid of Apple Buy Now, Pay Later. We got another electric vehicle maker going bankrupt this morning, Fisker. We saw that one coming. We talked about that a few weeks ago when they were exploring restructuring options. And based on the amount of cash that they had, we said, hey, by July, they're going to be bankrupt. And here we are in the middle of June, and they're bankrupt. So another EV maker bites the dust. The EV bubble continues to burst. Boeing is back in the hot seat. We've got another whistleblower report from Boeing this morning. What is going on over at that company? And it's right as their CEO is set to testify in front of the Senate today. Get another whistleblower report saying that Boeing lost track of some 400 bad parts that may or may not have been installed in planes. This is parts such as rudders and flaps. This is on top of a similar whistleblower report that said defective sections of fuselage were being installed. Look, guys, Boeing is still under a deferred prosecution agreement. They said if we double down and demonstrate a commitment to safety, the government won't criminally prosecute our company for that anti-stall system that caused several crashes that killed a few hundred people. That's something the company knew about, and they swept it under the rug. Well, has Boeing demonstrated a commitment to safety? You guys tell me. Does it seem like deleting records, panels blowing out, pieces falling off, whistleblowers winding up dead? And now we've got another whistleblower report from Boeing. We've got Malaysia this morning is out saying they want to join BRICS, another country lining up to join the BRICS alliance. And last but not least, McDonald's is ditching their AI ordering program. They were doing a pilot with IBM where, you go to the drive-thru and instead of talking to a human being who messes up your order, you get to talk to a chatbot who messes up your order. And, well, McDonald's said that didn't work too well because the chatbot didn't understand what people were saying, and so they're abandoning the project. So don't worry, AI, it's going to displace all these jobs. Everybody's going to be put out of work by AI. Well, if your job is taking fast food orders at drive-thru, for now, your job is safe. A lot going on in the world this morning. Technical issues going on this morning. Good God. Why don't we shrink my big melon of a head? And let's see what's going on. And I am going to have to reset every single one of my charts as we go through the market here, guys, because I had to reboot. The S&P is down one measly point, 0.03% to the downside ahead of the opening bell this morning. We have got the Dow is also doing something similar, down 30 points or 0.08% ahead of the opening bell this morning. And the NASDAQ, meanwhile, is up 4 points or 0.02%. So not a whole lot of movement in stocks going on this morning. A little bit of a reaction here when that retail sales number initially came out. There was some volatility. Stocks moving lower on that news. Meanwhile, the U.S. dollar actually took quite a dive on the initial report of those retail sales numbers. Here you go, right at 8:30. We saw the dollar weaken substantially, catching a little bit of a bounce here and still positive on the day at 105.34. That's up 2 basis points. Looking over at the bond market, we have got yields are moving lower this morning. The 30-year Treasury is down 2 basis points to 4.390. The 10-year is at 4.244, down 3 points and change. The 2-year is at 4.714. That's down almost 5 points. And the 1 month is at 5.32. That's actually down a couple of basis points. So we're starting to get some movement in the 1 month here. That's interesting. Keep an eye on that. We were about 5.38, 5.39 this point last week. Also, looking over at the commodities board, spot gold is at 23.20. That's up just 95 cents or 0.04% this morning. Spot silver at 29.27. That is up down 19 cents or about 0.2%. You'd think we'd see silver moving higher on that weakening of the dollar and the dropping of interest rates, but that's not what we're getting this morning. We got kind of a mixed bag in commodities here. July copper futures at $4.40. That's down about a nickel this morning. July platinum futures are down a fraction of 1%. Palladium futures are down about 2%. And WTI crude oil for August at $79.95, pushing that $80 threshold here. That's up about a quarter of 1% this morning. Looking over at my favorite of the shinies, check out that silver chart. We caught a bounce once again at the 50-day moving average this morning, guys. This is 4 days in a row now that we've been flirting with that 50-day line. So it's holding for the time being. We'll see if we catch a bounce here. I'd really like to see that bounce, but right now just keeps testing that line. Sooner or later, one of those tests is going to fail if we don't catch a bounce sooner or later. And looking at the Bitcoin chart, we have officially lost the 50-day moving average on Bitcoin. That is down another $1,494 on Coinbase this morning, trading at $64,988. Now let's talk about the main story here this morning. Retail sales in the United States increased by 2.3% year over year in May. That's following a downwardly revised 2.7% in April. The number was for April, it was 3%. We lowered that down by 0.3 of a point, and we're being reported as 2.3% growth. Now, the market was expecting 2.8% growth, so this is a pretty big miss here for retail sales numbers. And once again, guys, these numbers are not adjusted for inflation. So we're seeing retail sales growth that is less than the rate of inflation, which means less stuff is actually leaving the store. And you can see here at 2.3%, we've been falling now for 2 months. Also, on a month-over-month basis, retail sales in the U.S. edged up 0.1% month-over-month in May. That's following a downwardly revised 0.2% fall in April. Initially, April was flat at 0.0. They revised April lower to negative 0.2. Now, growth for May came in at 0.1%. The market was expecting 0.2. So again, a big miss here. This is another sign that consumer sentiment is cooling. We get a little bit of granularity in the data here. Sales of sporting goods, hobby, musical instruments, and books recorded the biggest increase of 2.8%. Those still don't keep up with inflation. Followed by clothing at 0.9, motor vehicles and parts at 0.8, and non-store retailers at 0.8. Other increases were also seen in electronics and appliance stores at 0.4, miscellaneous store retailers at 0.4, health and personal care 0.1, and general merchandise 0.1. In contrast, sales at gas stations sank 2.2%, and those at furniture stores were down 1.1%. Sales also declined at food services and drinking places, negative 0.4, and food and beverage stores, negative 0.2. Excluding gasoline, sales rose 0.3%. Meanwhile, sales excluding food services, auto dealers, building material stores, and gas stations, which are used to calculate GDP, were up 0.4, following a 0.5% drop in April. So actually, this might actually skew the GDP numbers a little bit higher, believe it or not, even though these are disappointing numbers, is what they're saying here. And meanwhile, we've got some signs of cooling in the labor market, and Goldman Sachs can see it. Goldman sees U.S. jobs at an inflection point and sticks to their 2 rate cut call. GDP growth has slowed meaningfully. It's according to their economists. The U.S. labor market stands at a potential inflection point where any further softness in demand for workers will hit jobs, not just job openings, according to economists at Goldman Sachs. The current strength of labor demand is unclear, with healthy non-farm payrolls contrasting with rising initial and continuing jobless claims in recent weeks. That's according to economist Jan Hatzius, who wrote in a note to clients. Ultimately, the key driver of labor demand is economic activity, and GDP growth has slowed meaningfully, Hatzius wrote. So despite the Federal Reserve's surprisingly hawkish projections last week, we feel good about our forecast of 2 cuts in September and December. And we got some data to that effect also from MacroEdge this morning. Check this one out here. The latest revised California job figures from the Legislative Analyst's Office for Q4 of 2023 show net job losses rather than strong labor growth as reported initially. And of course, MacroEdge rather laughably points to this chart and says, revise 8 months later so we can keep bidding tech, referring to the AI bubble. Here's the chart that MacroEdge posted. Now, this light green number, that is your initial postings in the non-farm payrolls for that state. And you can see, oh, look, California had some fantastic job numbers. And of course, then we go back and we revise the numbers through the end of the fourth quarter. And oh, our bad, here's in dark green. This is what they actually did. A change of 150,000 to the downside. So once again, create a whole bunch of fake jobs, broadcast them, claim your economic plan is working, make your stupid speech and get your picture taken and the stories are run, and then very quietly revise the numbers lower after the fact that says the labor market is nowhere near as strong as we're claiming it is. Jerome Powell very, very subtly says there is an argument that they may be overstated. Gee, look at this chart, Jay. You think maybe they're overstated? Something we've been saying for over a year now. The labor market is not nearly as strong as they're telling us, and you could see it clear as day, guys, wage gains not keeping pace with inflation. We've been saying it for almost 2 years now. If the labor market was really that strong, then we would see wage gains outstripping inflation, not lagging, because labor doesn't get cheaper relative to goods and services in a tight labor market. When there's not enough supply, labor would be getting more expensive, but it's not. It's getting cheaper. So strong jobs market is a myth. Nothing new here if you've been watching this channel. Also, Apple stops offering buy now, pay later loans in the U.S. This one hit late last night. Now, Apple has not given many details here. They're saying on Monday that it has stopped issuing loans through Apple Pay Later, its buy now, pay later program that launched last year. The move comes after Apple said it would start allowing installment loans later this year in its Apple Pay checkout process through third-party companies such as Affirm and credit and debit card issuers such as Citigroup. Apple said it would no longer issue Apple Pay Later loans, which enabled customers to buy products online and pay in 4 interest-free installments at prices up to $1,000. The discontinuation is a sign that not every new fintech feature or product that Apple launches becomes a success or fits in with the iPhone maker's overall strategy. So I guess we can put this one in the dumpster along with the Apple Vision Pro, and who knows, maybe Apple Intelligence ends up doing this also. But look, guys, Apple Pay, interesting. Apple Pay Later was the one buy now, pay later service that was going to start reporting non-payments to the credit bureaus. They were the one company that had stepped up and said, we're going to start reporting people who don't pay. Now, rather than doing that, they're just saying, we're not going to take any more loans. We're going to let Affirm offer it through our service, but we're not going to hold those loans on our books. Apple used to make these buy now, pay later loans, and then they would sit on the books of an Apple financial subsidiary, and then hopefully they would get paid back eventually. But as we know, as the coverage from this channel, you've seen the average borrower in these buy now, pay later apps has very lousy credit. They're behind on their credit cards and other debt. They're behind on their student loans and their car payments. And so there's very little data to say just how safe this debt is, but there's a lot of circumstantial evidence that says this stuff is toxic garbage, even though it's being securitized and sold into pension funds by fintech companies. And now Apple is getting out of this business. Maybe Apple got to look behind the hood or look under the curtain. Look under the curtain or look behind the hood. Yeah, you get where I'm going with that. Apple found out people aren't really paying. That's my theory. They didn't say that, but I suspect non-payment is playing a big role here. Apple says, we're going to let Affirm worry about getting paid back later. They can pay us a fee to offer the service on the phone. And another EV maker goes bust. Electric vehicle startup Fisker files for bankruptcy. Fisker has run out of cash after a failed effort to change its business model and find a financial savior. A much-hyped startup that sought to mimic Tesla's success has filed for bankruptcy roughly a year after releasing its first electric vehicle model. The filing marks the second time an automotive venture by car designer Heinrich Fisker has gone bust and follows weeks of quietly winding down its operations. Now, there was a statement here about the number of cars that they had made. Where are they? Fisker's bankruptcy follows a troubled rollout of its inaugural vehicle, which was criticized by many customers and reviewers for quality issues. The company also missed several deadlines to file its financial results with regulators, which it attributed to a lack of qualified accounting professionals. The electric vehicle maker also lost several top executives, including 2 chief accounting officers, in less than a month. And Chief Financial Officer Geeta Gupta Fisker, who is married to the CEO, has said the company's finance team struggled to keep pace with growing complexity of its finances as vehicles went into production. So if only there were some clues that this company was bound to go out of business. I don't know, 2 chief accounting officers leaving the company in less than a month, nepotism in the CFO's office, the CEO's wife is the CFO. This is not a mom and pop business, guys, where the wife keeps the books. This is an electric vehicle maker, publicly traded company. Look, anybody could have seen this one coming. No big surprise here. The EV bubble is bursting. Fisker stock right now is trading at a little over 4.5 cents. Basically, it's going to be going to zero. If you're holding this stock, you're going to get wiped out here. Also going on this morning, Boeing lost track of up to 400 bad 737 parts, whistleblower says. The Senate subcommittee releases a memo detailing new allegations just as CEO Dave Calhoun is set to testify on Tuesday before the Senate panel. So this looks like a good old sandbagging here. We've got a Boeing whistleblower files this report about these bad parts, and it hits the press on the morning of the day that the CEO is supposed to testify in front of the Senate. You think they're going to beat him over the head with that in front of the Senate? You bet they're going to. A Boeing quality inspector alleged the plane maker mishandled and lost track of hundreds of faulty parts, some of which he said may have been installed on new 737 MAX planes. The latest revelation by a whistleblower pointing out possible misconduct at the manufacturer. The claims were detailed in a June 11th complaint by Boeing inspector Sam Mohawk with the Occupational Safety and Health Administration and were made public by a U.S. Senate subcommittee on Tuesday in a memo to members. Boeing said it's reviewing the claims after receiving the document late Monday. As of last year, Boeing had lost as many as 400 faulty 737 MAX aircraft parts and deleted records for many of those from an internal cataloging system, according to the complaint. Now, if they're deleting records, that's the problem right there. Losing parts, you can claim stupidity. You can claim incompetence. Deleting records, that is showing a cover-up. That's a big problem if they confirm that. So-called non-conforming parts are damaged or inadequate components that are supposed to be tracked, disposed of, or repaired with meticulous records to ensure they aren't used in the aircraft manufacturing process. Mohawk also claimed that Boeing intentionally hid improperly stored non-conforming parts, including large components such as rudders and flaps, from the U.S. FAA ahead of an on-site inspection. So, guys, this is a company, again, they're still bound by a deferred prosecution agreement for those crashes that were caused by the anti-stall system. As long as they demonstrate a renewed commitment to safety and change the culture at the company, they wouldn't be criminally prosecuted. They have not done that. They killed people. They promised they'd get better, and they didn't. What the heck are we waiting for here? Are we really so worried about defense contracts, or are we really so worried about all the lobbyists that Boeing has? I mean, if the Senate doesn't go after them and actually do something here, if somebody doesn't start prosecuting executives at this company, then we've got bigger problems here. Boeing stock is down a measly 0.25% on this news. You'd think this would be really bad news, but apparently the stock market says, you know what, Boeing whistleblowers with safety concerns, this is something that happens every week. It doesn't even affect the price. Is the market telling us that they're really confident that anything is going to happen to these Boeing executives? Down 0.25% today? No, the market is telling us they're not going to do anything to Boeing, that they're going to get away with it again. Trading at 177.96, down just 43 cents this morning. Also going on this morning, Malaysia is preparing to join the BRICS economic group, according to a media report. There's not a whole lot more to this, guys. Malaysia's looking to join BRICS. They're joining Iran, Egypt, Argentina, Saudi Arabia, a handful of other countries who have recently joined BRICS, along with, of course, Brazil, Russia, India, China, South Africa. The BRICS bloc is getting bigger. The global South is aligning themselves with Russia and China economically, as opposed to the G7. And this is the splitting of the world, you know, the deglobalization I see happening here. Pick a side, apparently, is what's happening economically here. Malaysia is the latest to join. Again, guys, I am not one of the BRICS alarmists. I don't think the dollar is going to be dethroned tomorrow. We've been hearing about the gold-backed currency or the end of the Saudi Arabia agreement. There's been one BRICS story or another for like the last 2 years constantly. And yet the dollar has not been dethroned as the world reserve currency yet, although it is slowly losing that status. But there's nothing that is threatening to stand up and take over its role as the dominant form of reserves. Although gold, central banks are buying a lot of gold. And, of course, I like the shiny. And last one of the day, McDonald's to end AI drive-through test with IBM. Another AI product that doesn't work so well. Call me shocked. McDonald's is changing course on its artificial intelligence plans. The fast food giant will end a test run of its AI drive-through technology partnership with IBM in more than 100 restaurants. The so-called autonomous order taker will be shut off no later than July 26th, according to a memo sent to franchisees last week, obtained by CNBC. The global AI partnership began in 2021. The combination of technologies from the two companies aimed to simplify and speed up operations with voice-activated ordering. Two sources familiar with the technology told CNBC that among its challenges, it had issues interpreting different accents and dialects, which affected order accuracy. McDonald's declined to comment on accuracy or technology changes, while IBM didn't immediately respond to a request for comment on the tool's accuracy. So instead of a pimple-faced teenager messing up your order, you had a chatbot messing up your order. I guess the chatbot messed up the order even worse, and it was so bad that McDonald's is abandoning this pilot program. Now, they go on to mention that Del Taco, Wingstop, Panera Bread, all kinds of other companies are currently exploring some form of AI ordering as well. McDonald's is just the first to abandon ship on that project. One more case of AI products just not working as good as advertised. And I just want to say thank you very much to Mr. Mighty Mike, who says, thanks, John, sir. Reverse repo at 333. Okay, we have not looked at reverse repo in a while, Mike, and that one snuck by me. Let's see, 333 billion reverse repo. All right. So the excess liquidity in the system is resuming its downward march, I'll say, but ever so slowly. Look at that. It's just, I tell you, the reverse repo was falling like off a cliff for most of the fall and early winter. And then we got to about February, early March, guys, and it just leveled off. And we stayed in this mid-4s, high-3s range for about 3 months. Now it looks like we're finally starting to make new lows again, but still 333 billion left in the reverse repos. So that black swan liquidity event, it's still a long ways off according to that chart. But thank you, Mike and John, sir, for pointing that one out. That is a new development this morning. And thank you, Cole Marsh, who says coffee time. I appreciate the wake up juice, sir. Thank you for supporting the channel. Thanks to Sam for becoming a Melonhead member. I appreciate that very much. He says Google AI said cross Lake Champlain for groceries. Oh, is that what it told you? Just go ahead and swim across the lake and you can get groceries over there? Well, okay. Maybe use a boat or drive around the lake. Maybe don't try to drive through the lake. Yeah, Google AI. Look, the Google's AI, I don't know if anybody has searched anything recently, but when you do a search these days, you got to be real careful those first few results that pop up because they're AI-generated results. I've covered this. I did the video about pizzas being glued together. The first few results when you Google something now are AI-generated results that are based on Reddit user posts. And anybody who's ever been on Reddit knows not everything on Reddit is entirely accurate. In fact, a lot of it is straight up laughable BS. And yet Google is using that data to spit out AI search results. So be very careful, guys. Google's Gemini product, it's not where it needs to be. And apparently its AI navigator is saying, just go ahead and cross Lake Champlain for groceries. Good luck with that one. Apparently Google knows you're a strong swimmer, Sam. All right. Appreciate the laugh. Thank you very much. And thank you, Mish, for the reminder that there is no show tomorrow. Markets are closed for the Juneteenth holiday tomorrow, so we will not be doing the morning update live tomorrow. I apologize, guys. You'll just have to wait another 24 hours for your Melonhead fix in the morning. Thank you, Mish. Appreciate the heads up there. And thanks, Uncle Fester said, is it my imagination or is the constant revision in BLS numbers a new thing? Define new. It's something that started middle of last year, early last year, and it's been pretty consistent. You know, we've seen like 10 out of the last 12 months of jobs reports, the revisions, they're always revised down. And now we're seeing these big annual revisions or these big quarterly revisions at the state level data being revised down. I've heard a couple of commentary on this. There some people like the statisticians and the bureaucrats are trying to say, oh, it's because companies aren't responding to the surveys. That's why everything is so bad. Well, that's one possible thing. And then there's also the birth-death model that the BLS uses. They basically calculate X number of companies going bankrupt and X number of companies being created and joining, and hiring people. Well, I heard some commentary over the weekend that said the birth-death model for businesses is fundamentally flawed. And the reason why we're not getting so much responses to the survey isn't because people aren't responding to the survey. It's because the companies are going out of business and they're just not there to respond to the survey anymore. And yet they're not being accounted for in this birth-death model at the BLS. I haven't had a chance to scrutinize the math and how that works, but it was a credible source that was talking about this. So it's very possible that the BLS numbers revision isn't something nefarious. It's just there's this massive problem of zombies going out of business that is not being caught in the data. They're just saying, well, these companies are still there. They're just not responding. Well, they're not responding because they're dead. It's not going to change. They're not going to respond next week. They're still going to be dead next week. So that's possible. That's what's going on with the BLS data. Thank you, Uncle Fedster, for the super chat. And thank you, Nashville Pasta Man, who says, didn't Zoolander save the Prime Minister of Malaysia? That's right. He saved him from Mugatu. How's that for loyalty? God, good AM, Jackster. Referring to Zoolander. Yeah, thank you. The Prime Minister of Malaysia. It was Blue Steel that saved the Prime Minister of Malaysia from the assassination attempt by the evil Dr. Mugatu. And how do they thank us? By joining the BRICS bloc. I tell you, there's no loyalty anymore. You're exactly right, Nashville Pasta Man. But at the very least, we're building buildings big enough that the kids can actually fit inside the buildings, not just those tiny little models. Thanks a lot, Nashville Pasta Man. I appreciate the super chat and support of the channel. And thank you, everybody, for sticking with me through the tech issues this morning once again. A lot of tech issues happening lately. I don't know. Keep your eye on that one. Thank you to my channel members and Patreon supporters. Appreciate everything you guys do for the channel. Links down below should you feel so inclined. Hi, Mom. Hi, Dad. Love you guys. Till next time, live small and dream big.